For those of you around my age, if you ever watch Saturday Night Live, Wayne's World used to do this thing where we go back in time. And so I thought we'd go back in time. This is back in time. I thought we'd go back in time to a year ago and just revisit what the market looked like in terms of interest rates, in terms of what payments people will be making, that kind of thing. And I did have a little gander on your VREB stats to pull some data. Obviously, listings were quite a bit different. I think around this time and in around this February, March time last year, we had, I think listings were at 1,970. We're now at 2,630. And the reason I wanted to touch on this is we go into the spring market and people are like, now's not really a good time because of tariff Tony down south or whatever else we have going on. It's a bad time to buy. And so I thought I'd delve and sort of give you a bit of a synopsis so you can use some of these numbers or maybe a snippet of these numbers if your clients are giving you an idea that this is not a good time. So last year, an insured five-year rate mortgage was sitting at 4.99%. Okay. Versus now we're at 3.99 or a little bit better than that. Keep in mind on the insured side of things, we didn't have a $1.5 million limit, which we do now, as well as we didn't have a 30-year amortization for pure first-time home buyers, which we have now. So, a good number of reasons to get into the market. For high ratio mortgages, I used sort of the average condo price as of last month, 555,000. If they put 5% down or thereabouts, if they chose a 30-year amortization, they're going to save cash flow wise $597 a month last year versus this year. Obviously, I'm muddying things a little bit because we can use a 30-year amortization now. But if we were just comparing 25 to 25 years, they're still saving $319 in monthly cash flow. And if you're getting into a condo, that very well could be close to the strata fee savings year over year. So great time to get into the market now. If we're looking at single family dwellings, again, I'm using the average of the mean 1,132,000. Assuming we have 20% down. The rate last year for a conventional mortgage, 5-year fixed, well, it was much more expensive, around 5.6%. Crazy money. A lot of those people are coming back now. We're helping them out with that. Versus now we're sitting at around 4.44, 4.29%. So a significant savings. Cash flow wise, month over month, they're saving about $678 a month. Okay. So the people that jumped in last year, I don't know if now's a good time, but they did it. Versus this year, I don't think now is a good time. It's certainly better than last year, $678. It's quite a different piece. So and I'm seeing some of the calls for visual would be great from Owen Stacy. Yeah. So what I'm going to do is I'm going to post to April, and you guys can work some. You guys got it. If you don't have it, I'm sure you've got a mortgage app somewhere on your phone. If you don't have it, I'm going to send April the download. No obligation, of course, for my mortgage app. And this is exactly where I'm pulling the numbers from, just doing comparisons. So you can literally on your phone with your clients, throw these numbers together and have it right in front of them. It's pretty compelling to when you can show, and it'll show you the month over month payment savings. It'll also show you the interest savings over the term. So if people say, well, I don't know if now's a good time, you can show them that they're going to save over 5 years $10,000 plus in interest. That's money in their pocket, not the lender's pocket. So there's a ton of opportunities to have people understand what we can do here as far as the savings that they're going to have year over year. And it's always interesting to me. I talk about this all the time. It comes down to consumer confidence and the drivers of the consumer confidence. And I'm not getting on a soapbox too bad here, but the media. Right? The media, oh, now's a bad time. There's so many reasons to not do this. There's so many reasons to not do that. Let's go back to 2008. Those were the same reasons that it wasn't a good time to get in. Oh, the market's crashing. It's doing this. The States is in a flux. Would have been a good time to get in then. Would have been a good time to get in 2019. Would have been a good time to get in early 2020. So I just wanted to give you guys some ammunition as we go into the spring market. As the hows and the whys. Rates are still fairly flat. They're up one day, they're down the next, depending on who's tweeting and depending on which member of the White House staff is giving away secrets of Yemen and when we're going to attack and that kind of stuff. That's always cool. But yeah, still a good time to get in. It's always a good time to get in. But just, again, wanted to sort of quantify so you guys have some numbers. So bottom line, they're saving condo, let's call it, they're saving at least $300 a month cash flow versus last year. And on a single family dwelling, 20% down, they're saving at least $650 year over year. I mean, the numbers are pretty compelling. Like I said, I'll shoot the mortgage app. Again, if you guys don't have one, I'm sure you do, but if you don't have one, it's an easy download. And it doesn't necessarily curve people to me or anything like that, but it's just got great calculators for working out even your transfer tax or your land purchase tax. It's on there for BC, Alberta. It's got a great segment of calculators for you to use.